Have you felt the effect of inflation? Do you wish to make your money grows but don't know how to start? Today, we have an exciting topic for you: how to start investing. If you're new to the world of investing and wondering how to make your money work for you, you've come to the right place. We'll cover everything you need to know to begin your investment journey. So, let's dive in. Before we dive in, if you have any questions or anything you wish to add or share, kindly comment below. Let's restore rich together. First things first, have you ever wondered what happens to your money over time? When you simply let it sit in a bank account, it loses value due to inflation. But through investing, you can potentially beat inflation and grow your wealth. Let's take a look at an example. Suppose you invest $1,000 in a well-diversified portfolio with an average annual return of 8%. Over time, that money can grow significantly. In fact, after 10 years, it could potentially become $2,159. And after 30 years, it could reach an impressive $10,063. That's the power of investing. Now, you might be thinking, how can I stop my money from losing value over time? The answer lies in investing. By putting your money into assets that have the potential to grow, such as stocks, bonds, or real estate, you can protect your wealth from the eroding effects of inflation. But how does investing actually work? Let me break it down for you. When you invest, you're essentially buying a share or ownership in a company or asset. As the company or asset grows in value, the value of your investment increases. Additionally, some investments, like stocks, can provide dividends, regular payouts based on the company's profits. It's like having a slice of the company's success. Now that you understand how investing works, let's talk about why you should consider investing in the first place. There are several compelling reasons. First, investing allows you to potentially grow your wealth and achieve your financial goals, whether it's buying a home, funding your children's education, or retiring comfortably. Second, investments can provide a source of passive income, allowing you to earn money while you sleep. And finally, investing can act as a hedge against inflation and provide a way to preserve and grow your purchasing power over time. Now that we've covered the reasons to invest, let's explore the different product types available for investment. You have a wide range of options, including stocks, ETFs, exchange-traded funds, mutual funds, bonds, index funds, gold, real estate, and more. Each product type has its own characteristics, benefits, and considerations, so it's important to understand them before making a decision. Before we dive in, hit that subscribe button and the notification bell so you won't miss any video about investing. Stocks. Stocks, also known as shares or equities, represent ownership in a company. When you buy stocks, you become a shareholder and have the potential to benefit from the company's growth and profitability. Stocks offer the opportunity for capital appreciation through increasing stock prices and may also provide dividends, which are a portion of the company's profits distributed to shareholders. ETF, exchange-traded fund. An ETF is a type of investment fund that trades on stock exchanges, similar to individual stocks. It is designed to track the performance of a specific index, sector, commodity, or asset class. ETFs provide diversification by investing in a basket of underlying assets, such as stocks, bonds, or commodities. They offer flexibility, transparency, and lower expense ratios compared to traditional mutual funds. Mutual fund. A mutual fund pools money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities. Professional fund managers make investment decisions on behalf of the investors. Mutual funds provide diversification and are suitable for individuals who prefer a hands-off approach to investing. They can be actively managed, where the fund manager actively selects investments, or passively managed, where they aim to replicate the performance of a specific index. Bonds. Bonds are debt securities issued by governments, municipalities, or corporations to raise capital. When you buy a bond, you are essentially lending money to the issuer in exchange for periodic interest payments and the return of the principal amount at maturity. Bonds are generally considered less risky than stocks and provide fixed income with lower potential for capital appreciation. Index fund. An index fund is a type of mutual fund or ETF that aims to replicate the performance of a specific market index, such as the S&P 500. Instead of actively selecting individual securities, index funds hold a diversified portfolio of securities that mimic the index's composition. They offer broad market exposure, low fees, and are a popular choice for long-term, passive investors. As a beginner, you may wonder whether you should be investing or trading. Let's clear that up. Gold. Gold is a precious metal that has been valued for its rarity and durability throughout history. Investing in gold can be done through physical gold, such as bars or coins, or through gold-related investment products like exchange-traded funds, ETFs, and mutual funds. Gold is often seen as a hedge against inflation, currency fluctuations, and market volatility. It is considered a store of value and can act as a diversification tool in an investment portfolio. Property. Investing in real estate, such as residential or commercial properties, involves purchasing properties with the expectation of generating income and potential appreciation over time. Real estate can provide both rental income and potential capital gains through property value appreciation. Property investments offer diversification from traditional financial markets and can be a long-term investment strategy. Each investment product comes with its own set of risks, potential returns, and considerations. It's important to research and understand the characteristics, fees, historical performance, and risk profiles of these products before making investment decisions. Diversification and aligning investments with your financial goals and risk tolerance are key factors in building a well-rounded investment portfolio. Consulting with a financial advisor can also provide personalized guidance based on your specific circumstances and objectives. We also highlight other investment options in below link video. One common concern many people have is the perceived risk of investing. Let's address that. While it's true that investing involves risk, it's important to remember that risk and reward go hand in hand. By diversifying your portfolio, investing in different asset classes, and having a long-term perspective, you can manage and mitigate risks. It's about finding the right balance between risk and potential return that aligns with your financial goals and risk tolerance. You need to learn the feature and basic knowledge of the investment product you wish to invest and start small. Other things, it is better to diversify your investment to spread the risk. Start to invest from your idle money with acceptable risk, and always remember there is no easy money. Now, you might be wondering when is the best time to start investing. The answer is simple: right now. Time is a crucial factor in investing. The earlier you start, the more time your investments have to grow and compound. Whether you're in your 20s, 30s, 40s, or beyond, it's never too late to begin your investment journey. The key is to start as soon as you can and stay consistent. The power of compound interest will help you to retire rich. Investing is not limited to a specific age group. In fact, it's relevant for everyone, regardless of your age. Let's break it down. If you're younger, you may have a higher risk tolerance and a longer time horizon, allowing you to potentially take on riskier investments with the potential for higher returns. As you get older, your risk tolerance may decrease, and you may shift towards more conservative investments that focus on preserving capital. However, time also has great impact for investing. Check out our other video about value investing, explaining how it helps you increase your investment return. Lastly, you might be wondering how much money you need to get started with investing. The answer might surprise you. With the advent of technology and the rise of fractional shares and micro-investing platforms, you can begin investing with small amounts of money. You don't need a fortune to get started. What matters is taking that first step and getting into the habit of investing regularly. And there you have it, a beginner's guide to investing. Remember, investing is a journey that requires continuous learning, patience, and discipline. But with the right knowledge and mindset, you can unlock the power of investing and work towards achieving your financial goals. If you found this video helpful, kindly like, subscribe, and share with others who might benefit. Thanks for watching, and happy investing. If you have other inspirations and experience about investing, kindly comment below. Let's retire rich together.